With the crypto market crashing and fear setting back in, this is going to be a bit of an emergency update. Now, this was not the video that was due to go out today. However, with everything going on, I've quickly put it together to help people navigate this period. And so in this video, we'll be quickly covering why is the crypto market suddenly crashing, the 5 super helpful charts to look at in times of crisis, and then I'll finish sharing my latest crypto purchase right in the middle of this crash. Okay, so first up, why is the crypto market suddenly crashing? And so, first things first, why is the crypto market suddenly crashing? Well, I think it comes down to 3 things. The first is that we had the news that Mt. Gox was suddenly going to be repaying its creditors. So for anyone who doesn't know, this was one of the major crypto exchanges back in the day, which got hacked. And then everybody thought they had lost their money. Fast forward a decade and suddenly they were able to get hold of the missing funds, and a portion of these are going to be paid back to its customers. So potentially a lot of Bitcoin suddenly hitting the market. Then if that wasn't enough, we suddenly find out that the German government has decided to dump a big stack of their Bitcoin as well, as they suddenly have transferred 6,500 Bitcoin valued close to $500 million. So again, potentially another massive amount of Bitcoin being dumped on the market at the same time as Mt. Gox. And then number 3, we have to remember that about 10 to 20% of the market participants are going to be traders. And so as a trader, if you know that there's likely going to be a lot of selling pressure, then you too also sell, adding to the sell-off, and put all 3 together. And I think this is the primary reasons why we've had this sudden crash. Now on to the 5 pieces that I'd like to share in this video. Number 1 is this chart here, and this was the run of 2017. Now, most of you will have probably have seen this chart before, and it basically is just saying that even in the big blow off top, actually this was going from 2016 to 2018, so a 2-year uptrend period where it's going crazy. There are a number of massive sell-offs along the way. That's basically what it's pointing out. So a couple of things here. Firstly is that logically you will have seen this chart and understood it, but it's only when you actually go through a big sell-off and the market has actually dropped significantly, and if you're in altcoins it can be even worse, that you then emotionally understand this chart. But it still doesn't change anything. Even in crypto's uptrend, we're going to get these big sell-offs. And no matter how many times you get told this, it's still not nice when you actually go through one. And then secondly, so this was going back a few years now, but this was almost 40%, 40%, 40% was a typical drawdown. So what are we at right now? So just hopping over to Bitcoin's price, and let's just take it from this most recent top. So when it hit there and it's crashed all the way down, it went 25%. So in fact, in terms of big sell-offs, it's still really not that big. Remember last cycle, it was up to 40%. So although it feels like a big sell-off, 25% is actually not that bad. Now, if it were to go deeper, let's say this cycle, because we should be getting diminishing returns, not only to the upside, but also in the sell-offs, I'd say likely it's probably only going to be going to about 30%, which would take it pretty much down to the 50,000 level. That would be a nice sell-off for this market. And the 40% that used to happen, which I think it's unlikely to be doing that these days, would take us down to about 42,000. So historically, that's how big they were. So this one currently sitting at 25%. If that in fact turns out to be the bottom of this flush out, although it's not nice to experience, it's actually much milder this time around. Number 2. And this one of my favorite charts. And it basically says that in a typical cycle from halving to top, in the last 3 that have gone, they've either lasted 18 months or 12 months. So if we put this into quarters going from the halving, you have either 4 quarters to 12 months or 6 quarters to the 18. And I'd just like to point out that July, August, September is Q1, and in this cycle, from the halving that's just gone, we've pretty much just finished Q1. So if we do end up getting an 18-month cycle, this is where we're at right now. We've just finished Q1. So what does that say? It says we are still very, very early. This is where we would be. And this is a great chart to just put things into perspective. Number 3, and this is a very famous chart now, which was put together for the stock market. However, it pretty much can be used in all different markets. It's the psychology of a market cycle. And basically it just says that people are going to massively bid up an asset way above where it should be. There'll be massive sell-offs, capitulations into the worst period before things recover. And this cycle just repeats and repeats and repeats whenever you have millions of human beings buying something of value. Unfortunately, as emotional-based creatures, this is just what we do. So the question is, where are we in terms of this market cycle? I'll just pause for a few seconds, just have a think for yourself. Where do you think we are at? Now, feel free to pause the video if you want to spend some time on it. My 2 Satoshis would be, we've gone through the last crypto market crash. We bottomed out where Bitcoin was at about $16,000. We've had this crazy crypto spring where we've gone from 16,000 and right now we are crashing to 55,000, which sounds a bit crazy when you think it wasn't that long ago. It was at 16,000. So I think we've had a nice sell-off. We've probably had a nice run with the Bitcoin ETFs, which has taken us right up to this 50,000. And I think we're somewhere here. So we could be in a big sell-off like this. I think we could be in a big sell-off like this from top to bottom, or maybe even there. But it certainly isn't going to be the last. There's going to be more like this. My gut instinct is that we are somewhere here. We're still early, and the best is yet to come. Just my personal opinion. Number 4, and we'll bring up the market cycles, and this one is just to point out that historically, when we are in a bull market, in the times of the biggest crashes and biggest sell-offs, this has always been the very best time to buy. So let me just say that first bit again. This is in bull markets. So this is when the market is going up. So in this part of the market here, this is not correct in the bigger market crashes. So once the market has peaked and it's coming down, I'm not talking about this period here. So let's look at the biggest crashes so you can see what I mean. So just zooming in for a second and put into context. So this is the big crash that we're going through right now. And you'll notice that this is very common. So this drop here, it's not as bad as what happened here, similar to what happened here, similar to what happened here, not as bad as here, not as bad as here, not as bad as here. But you can see the crypto market does these flush outs time and time and time again. There are lots of them. And historically, a big flush out here would have been an excellent time to buy. And the bigger the flush out, so a massive drop here, would have been an excellent time to buy. The big drop here, excellent time to buy. The COVID crash, the bigger the crash, the better the buying opportunity. So massive flush out here, but one of the best times ever to have bought into crypto. And again, big flush out here, great time to buy. So as you can see, it points out that these flash crashes going on right now happen again and again and again and again. And the vast majority of the time, they are great times to buy if you have the money. So buy the dip if you can, has historically been very, very good. And if you're fully allocated, then you've just got to ride it out. And this brings us on to the very last point, number 5, which is the latest purchase that I just made myself, scraping together all the money I could. This is what I've gone for. And it's ENS, the Ethereum name service. So a little bit like in Web 2 when you have domain names like .com, .co.uk, the .ens is your .eth name. And essentially it's built on this principle. So as soon we're going to get the big Ethereum ETF. This is a visualization of the Ethereum ecosystem. And as liquidity begins pouring into Ethereum, I think it's going to benefit the entire network. So as the money pours in over the weeks and months, it's going to not just affect Ethereum itself, but it's also the liquidity is going to spill over and benefit all the layer 2s as well. And money will spill over and it's going to benefit the entire Ethereum ecosystem. Now, a better picture would have been the larger bowl at the top being Ethereum, then the middle one being layer 2s, then the Ethereum name service is obviously the smaller cap. So I think everything in the Ethereum ecosystem is going to benefit, but when you pick out a very small cap, it has a very good chance of doubling. So if the Ethereum itself is 345 billion, it's going to take roughly that amount to double Ethereum. However, when it comes to the Ethereum name service, which is currently number 75 in CoinMarketCap, this one has only 0.7 of a billion. So for this to double, it's going from 700 billion to 1.4 billion. So for me, this is a trade with a time frame of about 2 to 3 months. I'd say there's a very good chance that this will double and then this money will be taken out. So it's high risk. It's only a few percent of my portfolio. However, this is not financial advice and something to copy off. However, I'm just letting you know, full transparency, what I am doing. So there you are, guys. That was the quick update from me. As a quick summary, just remember, even in the best of times, big flush outs will happen. We are still very, very early, having just completed Q1. This is where I personally believe we are at in the market cycle. Historically, the biggest flush outs have always been a very good time to buy. And with the next generation of ENS, as they're soon putting this whole thing onto a layer 2, this is my personal buy the effing dip with a 2 to 3 month time frame. Hope this helps, hope you enjoyed, and I'll see you in the next video.